Hello everyone. In my previous video, we have discussed about the profitability analysis and we have discussed in detail about the various profitability measurement terms like gross profit, operating profit, EBIT and all those things. In this video, we are going in detail about one of the profit term that is called PAT. Okay, and we will see what is PAT, how do we analyze it, how do we interpret it, what are the things we need to consider while analyzing PAT, and also we'll see what are the common usage of the PAT, right? So let's start. So first is like, what is PAT? So PAT, if you'll see it, that sits way below the last item in the profit and loss statement. So that is our PAT. PAT, this is also called as net income. It is also called as net profit, right? PAT means profit after tax. Okay, so now till this time, if you have already watched my previous videos, you must be well aware of this profit and loss statement, the sample which I have shown or presented here, right? And if you know this, then using this I think you must be aware how you can calculate the different profitability terms, how to calculate gross profit, how to calculate operating profit, how to calculate EBIT, earning after tax and all, earning before tax and all, right? So you should be knowing all that. So using this, if I have to say what, how do we calculate PAT, that's very simple. So you need to take revenue, okay, and you need to reduce or remove all the expenses, deduct all the expenses. When we say all expense, means everything. So from revenue you start, you deduct COGS, you deduct operating expense, deduct depreciation, deduct non-operating income expense, add less, deduct interest, deduct tax. When you deduct all the expenses, that's where you will get your PAT. Okay, and as I said, if you are well aware of this profit and loss statement, how which or profit term sits where, what is it deducted at each level, then you should be able to understand, like in the question, okay, or for any financial analysis purposes, where you are starting. Let's say if you have gross profit, and from gross profit, if you need to calculate PAT, you would know I need to deduct operating expense, non-operating expense, income, then minus interest and minus tax. If you are sitting here in EBIT, like it's earning before interest and tax. So you will deduct interest, you will deduct tax, and then you will come to PAT. So if you know this, then you should be well aware how to calculate uh, the different profitability term. It depends what your starting point is, right? So if you are sitting here, EBIT, deduct interest, deduct tax, that's your PAT. Yeah. So that is PAT. Now, what is the importance of PAT? Okay, when we discussed in our previous video about the specific profit terms like gross profit, operating profit, each has some use. Like gross profit is used to understand your production efficiency, right? Production efficiency means like using your production cost, how much sales you are able to generate and how much profit you are able to generate, right? Operating profit, it shows basically the operations, business operations efficiency, like what's my overall profit from my business operations. Okay, so each term has a usage, okay, or has a factor, like what is the purpose of this, when I can use this, and all this we have discussed in our previous videos about gross profit, operating profit, EBIT, etc. So now coming to PAT, so what is the purpose of PAT, what does it show? Okay, so since the PAT is comes after deducting everything is deducted, all kind of expenses, then you get PAT. So it's like the final profit of the company. Okay, so basically it presents something like true profitability because it's after deducting everything. Okay, and since it is shown after deducting everything, that's where it is more important for shareholders, because that's the earning which is available for shareholders, right? So this PAT is basically shows the true profitability of the company after deducting all the expenses, and this is something which is very important to shareholders because that is something which is remaining after deducting everything for the shareholders, right? So this is about PAT. How do we calculate what the PAT is? Now how do we analyze it? Yeah, how do we analyze the PAT? So if we have two companies, A, B, A is having like PAT of 50,000, B is having PAT of 100,000. Can we directly conclude yes, B is a better company? If you do that, then you may not exactly be right. Reason being, in the any financial analysis, you cannot just draw the conclusion looking at just one amount, and that too looking at the amount in the first place. You cannot draw your conclusion by looking at the absolute amount. You need to always talk in the relative terms. When I say relative term, you need to calculate, you need to talk in the percentage terms. Yeah. So if I give you, for example, in this case, if I give you this was the PAT, but the sales was 100,000 sales for this, and it has like let's say it has like 500,000. So it has a sale of 500,000, it is generating 100,000, but it has 100,000 share sales, okay, but it's generating 50,000. So basically it is generating 50% profit, net profit on the sale, whereas it is just generating 20%. So if you draw the conclusion just looking at the absolute figures or absolute amount, that may not be right. You need to talk in the percentage term, relative term, and for this, for the net profit purposes, we need to calculate net profit margin. Net profit margin, which is basically nothing but PAT divided by revenue. Revenue from operation multiplied by 100. So once you have this, okay, like net profit margin, here it's 50%, here it's 20%, then you can at least draw some conclusion that looks like this company is more profitable because it is generating more revenue, more profitability than the B, right? So at least you can draw some conclusion. So you need to talk in the percentage term, not in the absolute term, right? So that's how you analyze, and then you can draw your interpretation that which is more profitable, or which business looks more profitable, or which does not look more profitable. So in this case, this looks more profitable, this looks less profitable. So that's how you can interpret. But while interpreting also, there are some factors we need to consider, okay? So let's talk about that. Okay, what are the things we need to consider? Okay, so if I just take the same example, we were trying to compare the A and B. So let's say this is having 50% profitability, this is having 20% profitability, like net profit margin, right? So first we need to, for any profitability comparison, okay, we need to make sure what we are comparing, are they actually comparable or not. So let's say if we are comparing one company A to company B, but this is a service industry and this is a manufacturing industry, and you are trying to compare, that may not be right comparison. If you are comparing two companies which belong to different industry, that's absolutely maybe the wrong comparison, because both must be having a different industry standards, right? So you need to consider the industries, right? The second thing which you need to consider is like, even within the same company, let's say for company A, if you are just trying to draw a conclusion how the company is performing, right? And if you just take the net profit margin, let's say 10%, 11%, 12, 13, 14, and you will see, oh, this net profit margin increasing year by year, so then the company must be doing well. So again, you cannot just go by this figure. You need to consider the other profit elements also before you draw the conclusion. Reason being, this PAT is sitting at the last level, okay? So now if the PAT is increasing, what is the element that is causing this to increase? Whether it's our revenue is doing well, or whether our cost of goods has come down. What's the reason this PAT is increasing? If there is a reason that, okay, let's say this is for company A, okay, and company B also the same trend. Okay, but let's say for company A, okay, there's a non-operating income. So this non-operating income has gone up. Okay, year by year it is going up. Whereas for company B, they are reducing their COGS. Okay, so for B they are reducing the COGS, but for A they are increasing the non-operating income. So now, how do you draw the conclusion which company is good or which is not good? Obviously, both companies may be good, but the reason that this company A is the net profit is increasing due to the operating income doesn't make it more attractive, because as a businessman or any business would like to grow their profitability based on the core business operation, not based on the non-operating incomes, right? So in case of B, their net profit margin is increasing because their cost of goods sold is going down. So revenue is increasing and cost of goods sold it's going down. So gross profit is increasing and that impact is coming to PAT. So that is good. But if it is coming to the non-operating income, that it may not be so good. At least when you compare both the companies, so it may not look that good, right? So that's how you need to compare. So you need to consider other profitability elements also. You need to consider trend also. Like if you are comparing the financial figure of one company, let's say company A, if you are comparing year 1, year 2, year 3, year 4, year 5, just to see the trend, right? So if any odd year comes, so again you need to analyze why. Was it a industry wide trend? There is a corona like situation that due to which the profitability went down, not just for this company, for others, right? Or what is happening? So you need to understand the complete thing. Okay, this industry average is 11, the company is operating as 11, but this year only it went down. What was the reason? Whether it was a industry specific reason or the complete global reason. So you need to see whether it happened with everyone. Okay, if it did not happen with everyone, whether it happened with that industry. Okay, if it did not happen with industry, why it happened with this company. Okay, even if with this company, like the PAT came down, what was the reason? It may be gross profit would be okay, operating profit would be okay, maybe there are some lawsuit filed. Okay, due to that my overall profitability came down, right? So that's how you need to analyze, and then you can take this and okay, it was just one off item, so we can ignore that because that was just a lawsuit, but that was never the trend or not post test. So based on that you can decide whether the company is good or not. So higher the good profit margin, good is good for the overall business, but you need to consider other things as well when you are analyzing the trend for the company or you are comparing with the other peers. Yeah, so that's basically the usage, um, that basically the way you need to consider and analyze. Now we need to see what are the like common usage of PET. What are the usage of PET? So first is basically the profitability. Since it's a part of the profit and loss statement, this is used to analyze the profitability of a company. Okay, if the net profit is margin is good, it means company is good, healthy and having a good profit, right? But the importance of this, the PAT, is very important for shareholders. Okay, why? As I said previously also, this is the profit which is available for shareholder, because we had a revenue, we deduct all the expenses and this is what remaining for shareholder. See, all this cost, like cost of goods sold, operating expense, non-operating expense, all this happen for running the business. These are all for running the business, right? That interest, it has gone to our debt holder, the people or banks who have provided the loan. Now the tax, it went to government, right? So even if you had a profit, you gave it to debenture holders, debt holders, then you gave something to the government, then whatever is left, that is left for the shareholder. That's why it is very important for the shareholder. Now, actually, when you talk about that, right, there are two kinds of shareholder: equity shareholders, and there is sometimes preference shareholder. Okay, we will discuss about the preference shareholders in detail, but since we are talking about PAT and shareholder, I want to give some brief about it. So when we talk about PAT, right, so from the PAT we need to deduct preference dividend. Any profit or any part of dividend which you are giving to preference shareholders, that has to be deducted, and then you will get earnings available for equity shareholder. This will be earnings available for equity shareholder, which will be useful for our key shareholder, like the equity shareholders who are the actual owners of the company, right? So you have a PAT. If you have a preference shareholder, you deduct the preference dividend, then you will get the actual earning available for equity shareholders. Yeah. If you don't have the preference shares, then basically whatever the PAT is, the same is available to the equity shareholder. Since it's a shareholders earnings, like revenue, like the profitability, that's why it is very very useful in analysis purposes. And this PAT, okay, PAT, I'm when I'm saying PAT, I'm assuming there is no preference dividend. Okay, so this PAT, or earnings available for equity shareholder, is used for many analysis purposes, like it is used for EPS calculation. What is the earning per share? So for that you do PAT divided by number of shares, then you will get your EPS. Then EPS is further used to calculate the PE ratio and market valuation, right? So this is very important element in the financial analysis. PAT, you get the EPS, from EPS you calculate the PE ratio and all. So for all the financial, so not only profitability, for all financial analysis purposes, right, this is really really important, PAT. And then the final thing, like this you can use to compare with the peers, compare with the peers or industry and all. If you are into like merger and acquisition, also at that time you take a look at all this profitability, what's the PAT, what's the means after having EBIT, what's the interest you are deducting, tax and PAT. So all these purposes, overall profitability analysis purposes, whether the business is doing good, generating values to the shareholders or not, this is all considered. So this is a really important terms, profitability term, which will also discussed, which we also be discussing in our upcoming videos, right? Yeah, of course, like when you do the financial analysis, you cannot just go by one profit element, because always there are some things missing or here and there. So one of the thing is like when we use this PAT, there again an argument that PAT also includes the depreciation. Like we have already deducted the depreciation, but depreciation is non-cash expense. Okay, so in some of the cases we add it back, but that is only for calculation purposes. But for all accounting purposes or for analysis purposes, PAT is like after deducting all the expenses. But we'll go through in detail, like as we go along in our financial management journey or this financial analysis journey, we'll see like what are the shortcomings of such of the some of the element, and what addition and deduction to be done for financial analysis purposes, right? Like EBITDA is one of the term which includes the depreciation, adds the depreciation back, etc etc, right? But all these things we'll discuss in detail in our upcoming video. But that's what I wanted to cover in this video. What is PAT, how do we calculate it, how do we analyze it and interpret it, and what are the things we need to consider, and why this PAT is very useful for shareholders. Okay, so I hope from this video you have got an overall understanding about the PAT and its other relevant items. And if you like this video and if you think this video is useful for you, please click the like button and subscribe it. And also if you have any comment suggestion, please write in the comment section. And if there is any financial management related terms which you want me to clarify, or any topic you want me to clarify, so you can write in the comment and I'll take up those topics as well. So so thanks a lot and see you in the next video. Bye.